Welcome to today's tutorial. Here is $1,000,000 lesson. This is taught in mentorships and you learn with hundreds of dollars, thousands of dollars and more, but I am giving you this based on the fact that you pay with your attention. How to identify strong order block, king order block and fair value gap. But we are solely going to be focusing on the strong order block. Institutions set their trades based on levels, and to identify these levels you need to be able to identify order blocks on a candlestick chart. Some traders use the line chart, some traders use the bar chart, but here as a candlestick chart specialist we are solely going to be focusing on the candlesticks formation. So there are 5 rules that categorize a strong order block. The first rule is the timing. There's a tutorial we have done on timing. Do the needful to watch that. However, to recap this, the best order block is formed during the London session. The second is a liquidity grab. Liquidity is the energy of the market. Liquidity is the fuel of the market. Without liquidity, the markets will not move. So, for an order block to be categorized as a strong order block, it has to move to a liquidity zone, grab liquidity, and move impulsively away from that zone. So, the third rule is that it has to have an impulsive move. It has to have an impulsive move, jumping up and breaking market structure. The fourth rule is that it has to break market structure. So if there is no break of market structure, we cannot categorize it as a strong order block. And the fifth rule is that it has to be engulfing. You have to see an engulfing pattern. So we have made a tutorial on the break of market structure, a tutorial on engulfing pattern. So do the needful to watch that so you can understand more. For instance, here we have an illustration of a bullish strong order block. Here we can see the sellers in this red candle and we can see the buyers moving in an impulsive move, jumping up and pushing price higher. Here we can see a bearish illustration. We can see the buyers in this zone, and here we see the sellers pushing price down in an impulsive move and pushing price down with great momentum. So these are the 5 rules that categorizes a strong order block. Now let us get to the chart to learn more and see more examples. Welcome to the chart. Just as Socrates said, I cannot teach anybody anything, I can only make them think. I can only teach them how to think. So also, I cannot teach you how to trade, but I can make you think like a professional trader. So right here on the chart, our purpose here is to identify strong order blocks on the chart, because not all order blocks has to be traded. Not all order blocks are strong order blocks. Strong order blocks are unique with their own features and characteristics. Strong order blocks are easy to identify on the chart, and strong order blocks give room for opportunities on the chart. So let us identify a weak order block so we know that they are different from a strong order block. Right here we can see a bullish candle and we can see 2 bearish candles closing this candle. This is a weak order block. We do not categorize this as a strong order block. This in this red box right here is a weak order block. Even though it meets some rules, it grabs liquidity and so on, but you can see that the move is not impulsive before it breaks structure. You can see two candles break this bearish candle and it is sloppy before it breaks structure. So this is categorized as a weak order block. So now let's just look out for a strong order block. Here we can see a picture perfect example. This is a textbook example right here. You can see the first rule, which is timing. Timing is met. This happens at London session. The second rule, which is a liquidity grab, it is met. You can see the high of this day is spiked, a liquidity grab. Another move, which is an impulsive move, you can see it is impulsive. And another move, which is a break of structure, we can see a break of structure right here, and we can see that all rules are met, and we can see that it is an engulfing candle. So this is a strong order block, a picture perfect strong order block. When price consolidates and retests this fair value gap, you can see that price dropped incredibly. So that is an example. Although, let me just explain the psychology behind all the moves here. When price closes in this level, you can see buyers in this zone, and the buyers of this day, they would have set their stop loss in this low. Meanwhile, there are some that believe that the market will continue selling. The stubborn sellers, for that day, they might have set their stop loss in the high, and the second day when market opens, market drives to this high to induce more buyers. Immediately more buyers are induced, then price drop. As price drop to this level, it would have stopped the buyers in this zone out, eating their stop, raiding it. And you can see when price raid their stops, what happens? Price consolidates, retests these zones, and drop further down. So that is how the market maker, that is how they grab the money of retail traders. So even if you understand them, it doesn't mean they won't still take your money, but you are going to take more away from them than they take away from you. That is just the fact of the market. So we have another strong order block right here. Although this is not a picture perfect example, but all rules are met. We have a liquidity grab. After the liquidity grab, we have an impulsive move that breaks this structure. You can see. And what do we have? A retest and price drops. And this is an engulfing candle. So timing is also met. We have the timing. After the timing, we have the liquidity grab. After the liquidity grab, we have an impulsive move that breaks structure, and you can see it is an engulfing candle as well. So all rules are met. So we need to train our eyes to know all the rules that must be met to categorize an order block as a strong order block. Taking more examples would further sharpen our knowledge. It will further increase how we are going to spot this on the chart, and it will further help us refine our psychology and let us understand how the market works. Here we can see another strong order block, although this does not meet the rule because the move that breaks structure is not impulsive, because after liquidity is grabbed, we have an accumulation and the structure is broken down. And you can see the retest of this zone, it invalidates this zone. This zone is no longer a virgin zone as price has already made some retest. However, this is still a good order block, not weak, because we have an engulfing candle. We have the timing is also met. So first is the timing met. We have the liquidity grab. Although not much of an impulsive move, we have the break of structure. So that is also a good move. Here we have a picture perfect move that is very clear and good, because we have a liquidity grab. The New York session of the previous day is grabbed, and what happens? It also meets the timing criteria. The timing criteria is first, we have the liquidity grab, and after the liquidity grab, we have a break of structure, and we have an engulfing candle as well as an impulsive move. So once you are able to identify a strong order block, you can in advance foresee the zones where the market maker is probably going to push price away from, and you are not going to fall for their trap, because the market maker plays different tricks on the chart to induce traders. Here we can see another good example. We have the session of New York liquidity grabbed. That's the London session and the New York session of the previous day. The liquidity is grabbed, and once the liquidity is grabbed, the timing is met. After the timing, we have what? We have an impulsive move that breaks structure. You can see the break of this structure right here, as well as an engulfing candle. So this is a good strong order block. And as I have explained the psychology behind this move before, we have sellers in these zones, and the sellers in these zones, most likely they would have put their stop loss at the high of the day, and the greedy ones will still want price to go further down. And what happens? Price consolidates as price consolidates this session, the London session, we would have had some buyers here who would have put their stop loss probably at the London and New York session, and as price opens the next day, price takes them out, breaks up to stop out the sellers in this zone, and price continues to sell. Price continues to buy up. So that is just how liquidity works. Here we can see the first rule is timing, which is met. The second rule, liquidity grab, and the other rule, an impulsive move that breaks structure, and we have an engulfing candle. So all rules are met, and we can categorize this as a strong order block, which is very very good. Let us go further to the chart to take more examples. Right here you can see price in this level, the timing is met, liquidity grab, and price. This is not much of an impulsive move, but out of 5 rules 4 are met, and we can still consider this a good order block. So we are still going to take more examples. Right here we have an example here. You can see the low of this day, and just at the perfect time a liquidity grab, and we have break of this structure in an impulsive manner, and we have an engulfing candle, and this is a strong order block. Right here we have another one. The session of the New York was grabbed. We have an engulfing candle, although this move is not so impulsive as we have some ranging before the impulsive move, but this is also a good order block. On your own, look at the chart, try to understand the psychology behind each move, mark out the strong order blocks, and I guarantee you that in a short while you are going to be milking the market like the pros do. Here we have the high of this day taken out, and let me explain the psychology behind these moves. This day we have some sellers here, and we have some buyers setting their stops at the low of the day, and what happens, they induce more buyers. We have some buyers setting their stops at the session, so they induce more buyers to take positions, then they sell down to stop them out, and the buyers at the low of this day also, they stop them out. So that is just how the market moves. It is a dog eat dog market. USD/JPY, let us look out for more strong order blocks to fortify our knowledge on this. Now you can see right here in this zone is a strong order block meeting the first criteria of timing, and you can see the second criteria, which is what it grabs liquidity, which is very good, and lastly another criteria, it is impulsive, break structure, and engulfing. So you can see the same psychology that the market maker plays on the retail traders, it works day in day out. You can see this structure is broken, this structure is broken. You can see that these patterns are identical, and retail traders keep falling for it always. It's just so funny. So you can see, let me explain the psychology. On this day you can see the market bought up. Impatient traders, inexperienced traders, they would have bought here, putting their stops at the low of the day. Price consolidated, price induced more buyers to take buy positions, more retail traders taking more buy positions, and what happens next? Price reverses against them, closes as a bearish candle, breaks this structure, goes down. So you can see the traders here, their stops are raided, and price drives down to liquidate the traders that use no stop loss. It is that simple. So let us drive further to look for more strong order blocks as examples. So you can see there's another block here meeting every criteria. You can see this is a bearish candle, a liquidity grab up, but as I told you earlier, this is a weak order block, not a strong one, because this zone is not a virgin zone and it is not engulfing. You can see 1 2. So there's a retest in this zone, so it means that price has traded back to this candle once before going up. So this is not a virgin zone and should not be considered as a strong order block. It is already infected. So let us look out for more examples to fortify our knowledge. You can see this right here, meeting the criteria, occurring in London session and grabbing liquidity and breaking structure in an impulsive move. This is a picture perfect one. You can see the price retests here and drives up. So once all rules are met for a strong order block, then it should be considered as one. Here is another. You can see the although this is not grabbing the kind of liquidity zone that we want, because the preferable liquidity zone you should watch out for are the daily highs and session highs and lows. So if it doesn't grab a liquidity from either of those zones, I guess you should look out for another opportunity. Here is a weak order block. So once you can identify a weak order block, it will be easy to differentiate it from a strong one. Let us move to other pairs to look out for strong order blocks, and we would not be taking so much of our time, but the more the examples, the better the understanding and the better we are going to be able to train our eyes. Here we can see the Asian session was raided, price moves up in an impulsive manner, breaks this structure, and tada. And the psychology behind this, as we have explained, you can see on this day price sold down, deceiving retail traders that this is a supposedly downtrend, and you can see sellers in this zone putting their stops in the eye of this day. Price came here, accumulated, grabbed liquidities to stop them out. So that's just how the market moves. That's how the market behaves. The market, once it sets the trap, it moves to the trap, raise their stops and move up. You can see, although this is not so strong because it does not move up impulsively, it retests and moves up. So we prefer an impulsive move, because the more impulsive the move, the better. Here we can see the New York session of the previous day being raided, an impulsive move down, breaking the structure. And what do we see here? You can see manipulation by the market makers. Let me explain the psychology here. You see, during this New York session, the market consolidated and started buying. We have buyers in this zone, and at the opening of the next day, they deceived more buyers with this candle. Then price went against them, took them out, consolidated and liquidated the account of the traders that set no stop loss. Here we have a picture perfect example. You can see on this day the high was set, market sold, accumulated, market sold further down, and right here we have some buyers in this zone that put their stop loss at the low of the day. You can see what happens the next day. As price opened on this day, it was a buying candle. Buyers are also happy and their stops are raided here. However, they induce more buyers to take position, then price goes against them, breaks the structure and rallies down. So that is how the market maker moves. He's very clever and cunning in his movements. So to be a good trader, you need to be able to decipher where the market maker is likely going to push price to. So when you can decipher that, it will be easier not to fall prey to their ploy. I'm sure by now you should have trained your eyes and be able to spot a strong order block if you see one. This is not so strong because it's not impulsive. I would love us to look at the textbook pattern, impulsive patterns that are very clear. We don't want choppy price action. We want strong price actions to categorize an order block as a strong one, because the institutional traders that call the shots, they move with big money, and once the big money is set in, price obeys and moves in the direction. Right here we can see a liquidity grab. The timing is also met. The high of the previous day is raided. You can see the psychology behind it. The other day you can see the market was buying, buyers set their stop loss at the low of the day. Market accumulated, buy more, inducing more buyers. Price went against them. This is an engulfing candle and impulsively breaks structure, drops down, and this meets all rules and criteria. So do the hard work, train your eyes, try to learn on your own. We can see this move on silver. And I guess we should already understand the psychology behind this move. Whenever you're about to take a move in the market, you have to have an idea of what is happening, because we cannot say that on this particular day the market makers will move the money. We cannot see the transaction. The forex market is a decentralized market. Only the brokers know where people have set the orders, but here all we can see are how the candlesticks are moving. So we already know from these days that people are already selling, ignorant traders are selling, then their stop loss is at where, at the high of the day. We have some buyers here too that they don't have a ripe buy opportunity yet, but yet still they are buying, and market comes down, raids the stops of the buyers, takes them out, targets the stops of the sellers. Before reading the stops of the buyers, it induces more sellers to sell more, then moves up to raid their stop and goes up to liquidate the traders that use no stop loss. So from this you should be able to think like a professional trader. You should be able to think like the market makers and act like them. How do they act? They are always strategic in their decisions, and they are always a step ahead. So on this day too, you can see. So that's why there's a concept: the market buys to sell and sell to buy. So yeah, even though it's about to go down as a sell trend, the market was buying. You see the buyers setting their stop loss here. It's consolidated, bought more by the open, a liquidity grab, an impulsive move down, break of structure. The timing is perfect, and you can see tada, this is a downtrend. So plan your trade your plan, and most importantly, manage your risk. If you find this useful, like, subscribe, share, and please follow for more.